Today, we're speaking to Rick Rule. He is one of the most well known and successful gold, silver, and natural resource investors here today. And Rick's going to be breaking down what's happening in mining stocks and gold and silver. And more importantly, what has him very excited because Rick wanted to talk specifically about today's subjects. You know, this is going to be a good one for you. So make sure you hit the like button on this video. Comment down below. Rick Rule rules right there down below. And we want to thank our sponsor today, which is Vizsla Silver, one of our favorite silver and gold mining stocks. So thank you, Vizsla Silver, for being our sponsor. Right there down below is a link where Rick will review your natural resource portfolio for free. We'll discuss that a little bit more later. And we want to thank you for coming on, Rick.
Jake, always a pleasure. Thank you for having me back.
Yes. So you were making the joke that you said, sometimes I make the mistake to think that, people will be interested in what I'm interested in. And I said, well, as being such a successful investor, as you are, it makes sense for us to hear what is really catching your attention and interest right now. And for you, you're saying that's right now the gold and the silver market, the gold and the silver stock. So what's catching your interest right now on what's exciting?
I got to say, Jake, almost everything is exciting. I feel sort of like Warren Buffett felt in 1982 when the stock market had really crashed. And he said, depending on the audience that he was speaking to, that he felt like an oversexed man in a cat house or a kid in a candy store. I don't want anybody to make reference to what they think I am. But the truth is that there are so many opportunities out there now that are exciting to me. You will remember 2 years ago, Jake, that we began to explore together the uranium thesis. That has worked out extremely well for your listeners. And as you may know, it's worked out very well for Sprott too, with us taking over what is now the Sprott Physical Uranium Trust. And we posted a news release yesterday about our takeover of Uranium Equities Mutual Fund. Well, I think the easy money has been made in uranium. I still believe the next 2 or 3 years will be good in the uranium business. So I'll be looking to add to my positions on pullbacks. I don't see any particular need to establish a position now, given that I established a position 2 or 3 years ago. But that's still exciting to me. I look at the uranium price today, and I look at what the incentive price to produce new uranium is, particularly with incipient inflation. And so I'm excited about the uranium space. But I'm probably more excited about the precious metals equities. The fact that they haven't done well for the last year is attractive to me, first of all, because the goods are on sale. I'm less excited about a sector where the price has doubled than I am about a sector that's fallen by 10 or 15%, particularly where I think it's going to go up. And I think precious metals are going to go up. We've discussed why. But for those of your listeners who haven't tuned into the earlier episodes where you and I discussed precious metals, I think it's instructive to go back over the fundamentals. In the first instance, precious metals do well when people are concerned about the maintenance of their purchasing power in more conventional instruments. Why might they be concerned about US dollar instruments? Well, quantitative easing, debasing the dollar. When it's done by Jake Ducey, it's called counterfeiting. When it's done by Congress, it's called policy. It's still counterfeiting. Debt and deficits. Jake, particularly people your age need to understand that debt and deficits are really a transfer of wealth from younger, hardworking people like yourself who haven't established their positions to old fat people like me who voted themselves all kinds of benefits but forgot to pay for them. Irrespective of the intergenerational transfer of wealth, they must make you concerned about the efficacy of the purchasing power of your currency because they have to print more currency to satisfy their obligations to old geezers like me. But the most pernicious, of course, is negative real interest rates, described by Franz Pick as certificates of guaranteed confiscation or by Jim Grant as return-free risk. Think about this. The US 10-year Treasury, they pay you 1.5% in a currency that they acknowledge is depreciating at 5.5%. In other words, the US government absolutely promises to diminish your wealth by 4% a year compounded over 10 years. Not very attractive. So for those reasons, I believe that precious metals prices will trade higher. How much higher? I don't know. What I can tell you is this. Over the course of my professional career, precious metals and precious metal securities have had about a 1.5% to 2% market share among total savings and investment assets in the United States. Right now, the same number is less than 0.5%. If demand for precious metals and precious metals equities merely returned to mean, if they ignored quantitative easing, debt and deficits, and negative real interest rates, demand for them would triple. And that's precisely what I think is going to happen. On top of that, Jake, the precious metals equities, relative to the free cash flow they're making at today's commodity prices, not the prices that I think the commodities are going to go to, at today's commodity prices, are cheap. And as you've come to know from these interviews, Jake, I love cheap. So I'm attracted to the precious metals equities. I'm attracted to the great big ones generating free cash flow. I'm attracted to the somewhat smaller ones that are generating even more free cash flow relative to their market cap, because I think the big ones will take them over. And I love to participate in takeovers. I'm interested in the development stage assets because the industry doesn't have very many good development stage assets in the pipeline, and they'll be taken over too. I'm interested in discoveries. It seems that there's things of interest throughout the precious metals equities landscape. I'm particularly interested because of the poor price performance in silver and silver equities. You'll recall earlier this year they had the silver squeeze, which people suggest now has failed. It hasn't failed. It hasn't gotten started. The real silver squeeze is not about a whole bunch of new young people being attracted to the physical silver market so that they can break the banks. The real silver squeeze is when demand for silver and demand for gold return to their 4-decade median or mean, when current demand grows by 3-fold or 4-fold in a market where silver supply can't increase that much. And the most leveraged asset of all, Jake, are the little silver stocks, even the big silver stocks. Our mutual friend, Doug Casey, told me 20 years ago, and it's true today, that the combined market capitalization of the legitimate silver sector is so small that when the generalist money tries to crowd its way into it, it's like, quote, siphoning Hoover Dam through a garden hose. It just doesn't work. That's happened to me twice before in my career, Jake. And while the returns that I enjoyed weren't quite as glamorous as the returns that I enjoyed in the uranium sector, the truth is that the silver sector is one where nobody has any expectation for success, when success is, in my point of view, almost inevitable.
So,
does that sound exciting? I'm excited.
Yeah, it does sound exciting. But so let me ask you this. So first of all the macro fundamentals for gold and silver, you talked about the counterfeiting. We've talked about the increase of money supply, the transfer of wealth. I've been covering it here on this channel, and I thought it was going to be bad. And I knew just up until recently it was, but it really hit me on another level this last week because I was helping my mother-in-law find a new car, and I was helping looking for a new employee to find a rental nearby. I could not believe it. I mean, first of all, there's no cars. Second of all, the prices are insane. The rentals are insane. I mean, the snowball's a lot further than I thought it was. So one would think that this would be the fuel for gold and silver. What do you think has held it up, especially as we're starting to see this come into a real domino effect?
Great question, Jake. Always check your premises. So let's talk about why, if all of this is true, nothing has happened yet. In the first instance, investors of my age have been trained over the last 40 years that everything's under control, that no matter what sort of difficulty we get ourselves into, Be it the tech wreck of 2000, the liquidity squeeze of 2008, the more recent COVID squeeze, it doesn't matter that the Fed has your back. The problem with that thesis is that the Fed has already spent its easy ammo. Do they take the interest rate below zero? Do you have to go to the bank and give them a toaster to open an account when they used to give you toasters for opening an account? My point is that what worked in the past doesn't necessarily work in the future, but the expectation of the future has been set by investors' experience in the immediate past. And in the immediate past, things just got better and better and better. And if any time things didn't get better, then the Fed came to your rescue, even to the extent of, quote, helicopter money during stimulus, where in a labor short economy, the Fed in their wisdom paid people not to come to work. The circumstance that you're talking about, which is to say the cost of living greatly outpacing average people's ability to earn, is something that is going to occur to people over two or 3 years, which is to say that the paradigm that people use to look at the circumstance that they're experiencing is going to change before your very eyes. We had 40 years to learn that inflation wasn't a problem, that government was our friend. All of those types of things. They didn't happen to be true, at least towards the end of that era, but people believed them to be true. The idea now that people will willingly buy a 10-year treasury, will willingly accept a 1.5% return in a currency that's depreciating by 5.5% means that we live in an era where narrative is more important to people than arithmetic. But the truth is, Jake, over time, arithmetic always wins. You will recall, and I think this is very instructive, Jake, to you and your listeners, that 2 years ago, when you and I would talk about uranium on this show, your listeners experienced a collective yawn, except for the more idealistic among them who sent us hateful emails saying that we were promoting Hiroshima and Nagasaki and 3 Mile Island. When the uranium price went from $18 a pound to $50 a pound, in other words, after the uranium price had almost tripled, after the easy money had been made, everybody cared. We're going to be talking about silver today, and some of your audience is going to say, oh shit, same old song from Rick. Silver, he's been talking about silver for 18 months. And 2 years from now or 3 years from now, when the price of silver is above $50 and the silver equities have all tripled, these same people who are snoring and yawning today are going to be begging you for a list of silver stocks after they've tripled. That's the lesson. It's just wonderful.
Yeah, it is wonderful. So let's talk a little bit about silver. I was talking to a friend that knows one of your colleagues, Eric Sprott, quite well. Someone that's another financier that's done quite well and everything, and all different types of commodities. And he was fishing with Eric a couple weeks ago, and I said, "Well, you got to tell me, the inside scoop." And he said he tried to get Eric's attention and talk about a bunch of different commodities, whether it was uranium or copper, but all Eric is interested in is silver, and he's convinced silver is going to $100. And he kind of laughed about it. He said he just wanted to talk about silver, and he says he's certain it's going to $100. Why is it that two of the biggest financiers, you and Eric, are so focused on silver? Let's talk a little bit about that. I mean, you're ringing the same bell that he apparently is.
Well, I need to begin by saying that although I'm a very good investor, as a speculator, Eric's in a league all of his own. He really, truly is superb. I've known him for a very long time, and I'm in awe of his discipline, his tolerance for volatility, his tolerance for pain, frankly, and his timing. Understand that Eric is a legitimate billionaire. And what Eric is interested in is betting what would be to most people extraordinarily large amounts of money with a willingness to lose it all in hopes of getting a 20-to-1 gain or a 30-to-1 gain. I mean, Eric is a true punter. So the first thing I'm going to say to your audience is don't try this at home, folks, unless you have the fiscal and psychological stability to play the game. But What is useful to know about Eric, and the part of Eric that I try in my own small way to emulate, is two things. He is a chartered accountant, which means that he understands economics and money from a practical viewpoint. He's not like a guy at the Fed who, gets to counterfeit and tell you what to do. Rather, he is a guy who studies the real economy and speculates based on his understanding of the real economy. And he understands as a chartered accountant that the current circumstance in its current form can't hold. That's useful. Eric is also a great historian. And Eric knows from his life's experience that precious metals bull markets are much greater in terms of duration and dimension than other people know. Most people, I shouldn't say most people, but many people have said to me, Rick, this bull market is by your reckoning already long of tooth. It's already 4 years old. They say the same thing to Eric. Both of us point out that the two prior bull markets in our career were 10 or 11-year bull markets, which is to say, we aren't halfway through. And in terms of dimension, people say, well, the silver price has already gone from, $14 to $22 or $23, well, 30 on its way, and then on its way back down. Hasn't the easy money been made? Well, in the first bull market of my life, the silver price went from $1.50 to 50. In the second bull market of my life, silver went from a more advanced $5 to 50, which is to say a 10-bagger. So when people say to me that the bull market has run its course, either by way of duration or dimension, I say to them, perhaps you're not as old as me. Perhaps you haven't studied history, or perhaps you were just a lousy student. But the truth is that I think that the precious metals bull market is not at its midway point, that wind is in the sails of precious metals. And I have noticed in prior precious metals bull markets that the first half of the bull market was gold-centric, and the second half of the bull market was silver-centric. And when the momentum was established by gold, then silver picked up. And when the silver was established by the momentum occurred in physical silver, then the silver stocks, at least the high-quality ones, not the junkers, but the high-quality ones, really surprised people with the extent and the rapidity of the rise. Again, for an illustration, what I would point your younger listeners in particular to was what they saw happen in the uranium stocks over the last 18 months. Uranium did nothing for 3 years while the arithmetic was evident. It did nothing, even though the writing was on the wall that uranium had to go up and uranium stocks, pardon the pun, had to explode. We have the same circumstance in front of us now. The writing is absolutely on the wall with precious metals. History teaches us that when momentum is in precious metals, the market becomes silver dominant. And history teaches us too that the most explosive asset class in precious metals is silver equities. It's right in front of you. The lesson with regards to the uranium equities is right in front of you. But for most of your listeners, until the thesis has run its course, which is to say, until the opportunity is less attractive because of price, people won't care. The game is to care when Eric Sprott cares, when the arithmetic is right and nobody else gives a damn.
Yeah, it's interesting to see that, you've always talked about like the psychology of the market with me, and it's weird to see that, nobody gets interested until there's like this quantum move up, and then no one's interested when the prices are cheaper. But you've been someone that's constantly taught us, about managing your emotions and looking at the buying opportunities. And it wasn't that long ago you were not interested in gold and silver stocks. You thought that they were overvalued, and now you're saying they're undervalued. So talk about the strategy and philosophy behind that.
Well, there was a point in time, you'll recall when those interviews happened, 2019, 2020, the junior mining stocks in particular were up 100 or 200%. And beginning market capitalizations that I had thought were cheap at $20 million were $100 or $120 million. And while $20 million might be cheap, $120 million is substantially less cheap. So we got to a point in time where the so-called bargains were up by 300 or 400%. Now, to some people, the fact that they were up, the price validated the thesis. To me, the thesis needed no valuation. It's just that implementing the thesis required that I spend dollars where previously I'd had to spend quarters. And I prefer to spend quarters, not dollars. Now we're in a situation where the markets run full course. Although the gold and silver prices are roughly where they were 18 or 19 months ago, the price of the high quality silver producers has in many circumstances fallen by 30 or 40%. And the prices of many of the juniors have fallen by 75%. What didn't excite me at all at $1.25 has me fascinated at 30 cents, particularly if I can get a warrant in a private placement, which is to say, buy the stock for 30 cents and get the right to buy some more of it for 45 cents if I so choose.
Now, I am someone that is not, to say the least, I'm not incredibly thrilled about the direction we're going politically, economically, and socially. And I think that, we're sitting on a lot of social instability, and a lot of it is things that I personally, the only thing I can control is looking out for my baby and my daughter the best that I can. And one of the most reasonable tools I could think of is basically to get as rich as I possibly can while managing my risk at the same time as fast as humanly possible. It seems like one of the only solutions that I have at my disposal, given my distaste for what I believe is an inevitable, maybe not imminent, to use your words, inevitable and imminent direction of social instability from everything from supply chains, inflation, et cetera, et cetera. So I'm looking at this saying, well, how do I, get the best fireworks that I can? And I know there's a lot of listeners that feel like that too. They sense this is a peculiar moment in history, and one of the things they can control is finances. It seems like we're entering a great climate for precious metals, commodities in general, and business at large. If there's things that don't fall in that category, what are the things that I should be considering, and a viewer should be considering in your estimation, to make the most of these opportunities and secure their freedom and independence for themselves and their families?
Well, I think you're getting the intangibles really right, Jake. The first thing is that you have studied enough, maybe not in terms of formal education, but you've studied enough to understand that there's a problem. But most people, be it your age or my age, don't understand it's a problem. And most people don't understand that they're responsible for their own outcome. Most people believe that everybody else is responsible for their outcome. That's a recipe for disaster. The fact, first of all, that you recognize a problem means that you will outcompete 80% of the population who doesn't even understand that there's a problem, or that they're in a race with fate, which they are. The second intangible, you've also done right. The most important investment that you can make is in yourself, in educating yourself and in generating utility for others, whether as an employee or, as you have chosen, as an entrepreneur. Investing in Jake Ducey and the Jake Ducey brand, investing in your online presence, bringing value to your customers so that your customers bring value to your sponsors, means that you've gotten the second step right too, which is good. You're 2 for 2. That probably means that you're ahead of 95% of the population. Now that I've bored you with the sort of old sage discussion of what you've gotten right, we'll talk about the financial responses, which is the thing that your viewers will like. Remember the great words of Warren Buffett. He said he made money by being brave when others were afraid, and afraid when others were brave. He liked and likes assets that make arithmetic sense, that are unpopular. Unpopular. He was willing to buy straw hats in winter when you didn't need protection from the sun, which is to say that he wanted to buy uranium when it was $18 a pound. He didn't need the psychological verification of seeing uranium at $55 a pound. He would rather have the arithmetic of 18 to 55 than the psychological solace of $55. That's very, very, very important. Important, too, to care about probabilities. What are the probabilities that precious metals react as they have historically to a circumstance where other forms of savings are being debased constantly and are likely to continue to be debased constantly because of the reality that most people believe the government's job is to subsidize them? To me, the idea that the government is able to end artificially low interest rates, that the government is able to end counterfeiting, quantitative easing, the idea that the government is able to service $150 trillion in on-balance sheet and off-balance sheet liabilities with a budget that's in deficit by $4 trillion a year. The probability of any of those things occurring is zero. The likely outcome of a continuation of the circumstance that we live in, likely, I would say overwhelmingly likely, is that precious metals will do well. When? I don't know. And frankly, since I don't know and I don't have any way of knowing, I don't care. If I believe an outcome is absolutely positively inevitable, and I think that the penalty for ignoring that outcome is severe, and the reward for anticipating that outcome is extraordinary, that I owe it to myself, that I owe it to my family, that I owe it to my tribe, that I owe it to my future to anticipate that situation, pay attention to the probabilities, and act. And I think you have that right too. If you have anything wrong, Jake, it's because of your age. It's because, and I'm guilty of this too, you have a logical linear mind. You think if A is true and B is true and C is true and D is true, that something has to happen, and it ought to happen soon. You have it all right except for the last one. It ought to happen soon. Imagine had you allocated as much money as you now realize you should have to the uranium stocks 3 years ago, what the reward would have been. There would have been a year when you had dead money. Let's say at that point in time, you weren't as wealthy as you are now. So let's say that you had $200,000 that you could have put in. Now that $200,000 would be worth $750 or something. For the first year when you had a $200,000 and it did nothing, and crypto was going crazy, or pot stocks were going crazy, or something that you didn't understand as well were going crazy, you might experience envy, or you might experience some sense of fear or boredom with regards to your 200,000. But the only way that you get in early is by getting in early. The rent that you had to charge yourself for being a year early would have yielded you 300% or 400% returns when the sector started going. So that's the one thing that I want to encourage Jake Ducey, and perhaps by extension, his listeners. Don't be afraid to be early. Don't be afraid to be right. Steel yourself for volatility, because you're going to experience it whether you want it or not.
Yeah, I'd be your neighbor right now. That would be the easiest way to summarize it. So
you'd be welcome.
So here's my kind of like question behind it. We can tie this back into silver, because all these themes that you've taught on our show, it's just interesting to see them play out in real time, and having a channel. I see it even on the views. Now uranium, where I couldn't get 10,000 views, I get 40,000, 50,000 on like every uranium interview. And then gold does the opposite. And so it's interesting to see that. And you used a term called price verification. You said you didn't need the psychological price verification. And so I was wondering if you could talk a little bit about the psychology behind that, and being early, price verification, And you could tie it back into specifically the theme on precious metals mining stocks if you'd like.
Sure. Your listeners who like to read should read a book called Human Action by Ludwig von Mises. If people try to read it and they don't like to read, they're going to hate me because it's tough reading. But von Mises talks a lot about human behavior, and he talks about recency bias. He talks about the fact that our expectation of the future is set by our experience in the immediate rather than the distant past, which means that we're all poor students of history, that we're victims of emotion rather than beneficiaries of rational thinking. And so when you talk about the uranium thesis and you beat people with the uranium thesis, but the uranium price doesn't go up, what you're talking about to them is a theory as opposed to anything that's important to them. It's merely a subject. When the price does go up and the theory becomes verified by price action, people, because it's their experience in the immediate past, the price action verifies the theory that predicted the price action. But most people don't have the discipline or the courage to take the action predicted by the theory until that price action has already justified the theory. The difference between a great speculator and a victim is that a great speculator will look at the equation, the set of circumstances that will cause an action to occur, and they'll act on it. The victim only acts on it after it's gone up enough in price that it's much less relevant than it was at the time that he or she could have predicted it, had they done the work and had they exercised the discipline. With silver, when the silver price a couple of years ago ran from $15 to $28, in the $15 time frame, there was no interest. At the $26, $27, $25 time frame, 25 to 28, people were fascinated. So they missed $15. They bought $27. When the silver price declined to 21 or 22, down from 29. In other words, when it became a better buy, they became disgusted. We've talked about this so many times, Jake. Let me tell your audience a parable, if I may. I don't know how much time I have, but this may put it in context. My offices used to be in an old Southern California strip shopping center. And on the north end of the shopping center, you'll remember it, there was Vaughn's supermarket at La Costa and El Camino Real. And the other side of that shopping center was our financial services office. And we would tell the story of an apocryphal Southern California couple, traditional couple. She did the shopping, he did the finances. So they come into the center, and the wife goes north, literally, to the shopping center. And she sees, she's looking for staples for her family. She sees some tuna fish, reasonably priced, $2 a can, a brand that she's familiar with, their family likes. So she buys herself 5 or 6 cans of tuna fish. And the husband comes to the stock brokerage firm, and there's a stock that he's relatively familiar with. Maybe he heard about it on Jake Ducey's show or read about it in Doug Casey. And it's $2 a share. So he buys himself 1,000 shares, and they both go home reasonably satisfied with their purchases. 2 weeks later, they come back, and the wife goes to the store, and that same can of tuna fish is selling for $4 a share, a can, up from $2. She's furious. She thinks that they're profiteering, and after giving the store manager a piece of her mind, she substitutes and buys canned tuna or salmon or something for her family, leaving the store in a huff. The husband comes to the stock brokerage and sees that this $2 share is now $4 a share. Nothing has changed except the price. But because it went to 2 to 4, from 2 to 4, he's elated. And he buys another 1,000 shares. 2 weeks later, they both come back. The wife goes into the store, and the store is stacked to the ceiling with unsold tuna fish because other housewives acted rationally. And it's now priced down to $1 a can, down from $4. Well, the wife buys so much tuna fish that the car's dragging at the back, because all the tuna's in the trunk. The husband sees the same share of stock. Nothing has happened to the company, but it's down in price from $4 to $1, and he sells all his stock in disgust. If investors would buy investments the same way shoppers buy physical goods like tuna fish, they would be much, much, much better off. But it seems with financial assets that we need price verification, even when the price verification destroys the very thesis that it verified.
Yeah, it's fun talking to you throughout the course of this because now I've actually been able. I mean, I know now why you're so rich. It's not just because you picked the right thing. That's like a very small equation of it. It's the psychological and emotional game that you investors like you and Eric and many of the other very big financiers that I've talked to, Doug. That's why you guys have been successful, whereas people that were interested in the same thing couldn't make it happen. So it's an emotional and psychological uh, game as well, right?
The discipline is important. The other thing is, Jake, I'm old. To be a capitalist, you have to have some capital, and capital compounds better over time. You don't expect to get from where you are to where I am very quickly, unless you take extraordinary risk and get extraordinarily lucky. Let's just say it's not probable. It's possible, but it's not probable. What people your age in particular need to realize is that real wealth will occur from being diligent and being disciplined, but it also requires time.
Now, all being said, what areas of precious metals stocks are interesting you the most? You know, a while ago when we talked about gold, you said you like just kind of the just the mid-level producers. We're looking great at these types of prices. Is everything uh, relatively attractive? All different types of areas of the stocks, from producers to developers. Are you looking at it? Are you looking at all the different areas?
Like I say, they're all attractive, and I'd say that question depends on who you are. Uh, a generalist investor who doesn't want to take much risk and doesn't want to do much work should buy the best of the best. He or her should buy, the Franco Nevadas and the Barricks of the world. The people who are willing to take a bit more risk but want more reward need to look at the mid cap, sort of $2 billion to $6-7 billion. Those companies are as cheap as I have ever seen them in my life, and they're either going to go up in price or they're going to be taken over. And if, as I believe, the gold and silver prices go up, in addition to the fact that they're cheap now at current commodity prices, they'll seem like extraordinary bargains if the gold and silver prices go to where I think they're going to go. For those listeners of yours who have psychological discipline and also who have the finances to be able to take risk, we're coming into a period of time now where the private placement market is going to offer extraordinary returns to people who are willing to work hard. That probably doesn't work for some of your listeners who either aren't accredited investors or can't afford a circumstance where they could lose 50% of their portfolio by making mistakes. But for those who are willing to take 50% risk in order to generate 500 or 600% returns, I think we're coming into a 2 or 3 year period of time frame where people who are psychologically and financially equipped can do very, very, very well in hard speculation, intelligent speculation in the private placement market. The subset that interests me the most is silver, because the database is intact. You know from 40 years experience where the deposits are, who the people are, what strategies work. I'm also attracted now particularly to that subset of metals that they're calling battery or electric metals. There's a lot of interest in the theme, but the people who are interested don't know how to apply the knowledge, which is something I absolutely love. I believe that we are going to continue for 30 years in an electric era, not merely because of things like Teslas, but rather because 1.6 billion people on Earth have no access to electricity at all, but they're going to have it in the next 15 years. And also because another 2 billion people on Earth have intermittent or for them unaffordable access to electricity. So demand for electricity is going to grow from old plutarchs like Eric Sprott all the way down to penniless peasants in Congo or Zambia or Zimbabwe. And this is going to be profound. And it's going to impact not just the means to get electricity to you or generate it, but it's also going to impact things like batteries. So I'm attracted to all these things. I'm now really, really, really studying the various rare earth elements and how to participate both by buying the rare earths themselves physically, because I think some of them 10 years from now will be priced very differently than they're priced today. And even at age 68, I'm willing to do things in a 10-year time frame. But I also want to understand the equities that I can buy that will give me the most potential gain relative to the risk I take. In other words, I don't want to buy something because it has rare earth in the share certificate. I want them to have some rare earths in the ground. I'm interested in the other battery metals. I'm interested in nickel sulfides. I'm interested in the high quality copper stocks, although the copper theme is getting beat pretty hard right now. I'm very interested in cobalt because I'm willing to take political risk. I understand that in order for me to buy cobalt, I have to buy Russian stocks and I have to buy mines in Congo, both of which I'm willing to do. Perhaps even eager to do, given that most people are terrified of those two names. So I'm attracted to that. On an entirely different note, Jake, I don't know why I'm doing this at age 68, but I'm part of a group starting a brand new bank. I've done this a few times in my life. I'm back.
Going to accept toasters for holding money, like you were saying at the
beginning? People won't have to do that, but this is a very special bank. This is an online bank with no bricks and mortars. We did it once before. We sold it to TIAA-CREF for a couple $1 billion after listing it on the New York Stock Exchange. I'm always interested in businesses that fill a need in the market, and this will be an online bank. It'll lend against physical security like precious metals.
Interesting.
The truth is, Jake, we live in a time that's going to be very challenging, but it's also a time that's going to be very, very rewarding. We are in a period of time of transition, which means that your mind is going to have to be flexible. And you're going to have to take advantage of the opportunities that exist precisely because other people haven't identified them. But I think it's going to be a very, very exciting time. Precious metals, yes. Battery metals, yes. For income-oriented investors, and I'm sure you have some listening to your channel simply because your channel is so big, owning oil and gas stocks, yes, the oil price has gone from 20 to 80, but so many people believe that the whole world is going to switch to Tesla by January. And so many other people are concerned about the fact that Biden and Greta and all those big thinkers don't like oil, that the oil companies are discounting $55 oil and $3 gas in a world where oil is selling for 80 and gas is selling for $5.50. If the oil and gas prices hold above $60 and $3.50 respectively, these stocks as a source of sustainable dividends are cheap and will continue to be cheap. And you don't need to go too far down the quality trail there. You can play that game just by buying Exxon. So I'm attracted to any number of things, Jake. What I'm afraid of is the way you led the interview off. There are a lot of people who see things very differently than me. And I think their outcome over the next 3 to 5 years is going to be very bad. And I think that their response to me doing well while they do poorly will not be to blame themselves for being lethargic sloths, but rather to blame me for being an applied, aggressive thinker and actor. That's what bothers me.
Yeah, that seems quite inevitable. I guess that's why your good friend Doug Casey's International Man will probably be a theme that will continue to be more and more valuable as time's going on. Really insightful and an eye-opening interview, especially you sharing all those various areas that you're excited about and interested in. So I want to thank you for coming back on. I was gone for out of town for the last 3 weeks, so we hadn't chatted in a little while. So it's good to see you again, and excited now that I'm back home to for us to got a lot of other areas that I'd love to discuss for everyone listening. If there was something that I missed that you'd like to see Rick discuss, give us a comment right there down below. I'll source it, excuse me, for a future episode. I want to thank our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. It's Vizsla Silver. Hit the like button on this video. I want to toss it over to Rick in the link down below. You can submit your natural resource portfolio to Rick, and he will rank it on a scale of 1 to 10 for free. And we'll put that in the description and toss it back over to you, Rick.
Yeah, Jake, I love visiting with your listeners, and to incent them to do that on an absolutely no obligation basis, I will rate your natural resource investments. Please, once again, no crypto, no technology, no pot stocks, just natural resource stocks. I'll rate them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if I think my comments might have some value. And in addition to that, if you mention charts in the subject line, I will include the 60-year Barron's Gold Mining Index, not because of technical analysis, but rather because it's the best visual representation of precious metals markets that I've ever seen, and makes the bull market case as clearly as anything I've ever seen. The second chart I'll send is a 100-year commodity chart that talks about various types of commodities and their prices relative to other asset classes going back 100 years. Once again, ruleinvestmentmedia.com.
So we want to thank you for listening to today's episode. Make sure you hit the bell notification to get notified for future episodes. Even if you're already subscribed, double check you hit the bell notification to get notified for future episodes. Give us a comment down below. Let us know what you think of today's episode. Anything that I missed. I want to thank you for joining, and we will talk to you soon.